What's going on, everyone? Welcome back. In this video, I'm going to be showing you guys how I use the 930 manipulation, or commonly referred to as the Judas swing. I use this component in my trading every single morning session to frame trade setups, what I'm looking for, and the draw and liquidity. Let's go ahead and dive right into it. So looking at this chart here, we see the market running to highs and running to lows, right? But now let's put this in the context of time. First off here, we see 9:30. That's what starts the AM session for me. I begin looking for my setups at 9:30, generally to around 11 o'clock. But what do I need to see before I'm willing to take a trade or a setup? And this is what I look for at 9:30. So again, we start with time. That's going to start everything as a smart money ICT trader. From there, we then want to look at price, right? Time first, then price. What do we look for in price? Buy side liquidity, sell side liquidity. So what I start to study at 9:30 is what liquidity does the market gravitate to first. That's going to be extremely influential for what we're looking at in the morning session. Reason being is because if the market's going to be bearish, generally we'll see a run higher at 9:30 first. And the reason that function is in price action is because if you think about how retail, how uninformed money looks at the market, they're chasing price. They don't know what they're doing. So when we using the market replay here. First time you've ever seen me using market replay, huh? So at 9:30, we want to study what does the market do? We see the market runs higher first, right? And if I'm bearish, if I'm looking for lower prices, I want to see 9:30 trade higher. In this video, I'm not going to touch on top-down analysis, why I'm bearish. Those are things that you can put together using other videos that we have. So if you are bearish top-down, and you're looking for lower prices, this is something you want to look for to confirm what it is that you're looking for in your higher time frame bias. So at 9:30, price starts running higher to the buy side, right? And then we see it sweeps that high once more from the 9:30 open. So since 9:30, what have we done? We've traded higher and have taken out buy side. The reason that's important because, as I was saying, the retail mindset is chasing price action. They don't have a model. They don't know what they're looking for. So at 9:30, this first run higher, that's going to be chased. And then what do you have here? Equal highs here and here. That is resistance or a double top in retail's mind, right? So they have either a buy stop here going short, or they want to buy on the breakout as it's breaking those highs. Either way, smart money is selling into this rally, right? So we see the market trade higher, attack the buy side at 9:30 first, and that gives you insight as to what we should expect for the rest of the morning session, which is a price run lower. And then here we see run on stops, breakdown, shift in market structure, fair value gap. And then the market trades down to sell side liquidity. Just for some extra pointers here on this one. This is something that we watched live this morning with the group. So here we can see the new week opening gap here. So extending that through. This fair value gap here was a short, covering inside the new week opening gap and these equal lows. So I didn't need the sell side. But again, the 9:30 Judas swing helps me frame what I'm looking for that session. And then from there, we see the market craters and sells off. So this is why you can trade many times without a bias. If you know what you're looking at, if you understand how the market runs the liquidity intraday, you don't need a daily bias to trade. It's very helpful, especially as a newer trader, to focus in line with higher time frame institutional order flow. But every single day, the market is doing these things here. And then we see the market trades into the sell side liquidity. In addition to that, you can study the market on regular trading hours. And you'll see here we open at 9:30, and then we open with a gap higher, right? So if you understand that these gaps like to get filled in the right context, then it makes sense for us to want to see the market trade higher first. I have a saying that I commonly say because it's very consistent in what I'm doing, which is if I'm bearish, I need to see one of two things: the market trade higher into buy side liquidity, or the market trade higher into a premium inefficiency. And you see in this case, we do that, and then that gives an easy short setup to close in this inefficiency and trade into that new week opening gap. All right, now for the next example here, I want to show you guys multiple examples of how I use this. I will have my team put a clip of a live trade I took this day using this information. So I'm going to show you guys not only how to use it, how I teach it, but more importantly, how I use it to make money, right? Which is why we're here, which is why we're learning these concepts. And I'm showing you guys in hindsight, showing you guys using market replay, but I want to reassure you these are things I use to make money with my team every single trading day, right? So let's go ahead and break it down. 9:30 open here. We want to frame our buy side here, and then our sell side here. So we want to study at 9:30, what does the market do? What liquidity does it run for first? Because again, generally that's going to put retail on the wrong side. Again, retail sees resistance or a double top because we hit it once, twice, 3 times, and then we broke down. So retail short with a buy stop here, or they want to buy on a breakout. Either way, the 9:30 move here is going to be the manipulation that smart money is going to sell to, providing liquidity for retail that wants to buy it here, either on a buy stop or buying a breakout. So at 9:30, the market runs higher to the buy side liquidity first, which is extremely important. Then from there, it breaks down to the sell side. Also, if you understand how to read the 15-minute chart, understand how the market trades to session highs and session lows, you can scroll back and then you see what all these obvious equal lows here from the London session. So this is going to be sell side liquidity, London lows. And like I said, if you have a daily bias, it's just going to make this even stronger, because if the daily bias is bearish, well, at 9:30, we want to see the market trade higher first, then break down. And this is what I was capitalizing on here, going short into the sell side. But what allowed me to trust it, what I had to wait for before I could take the setup, was the market trading higher first into the buy stops. Because once this happens, now we expect the high of the morning session to be priced in, and then we can trust all our sell models for the remainder of the AM session. So with that in mind, we traded, like I said, to a discount of the range. We have a mitigation block here. I'll be seeing how we trade in. That'll be an influential level for me. Why is that a mitigation block? Because it was an order block on the buy side of the curve, right? So if we're going to be bearish, then it is going to show signs there. If it's going to be bullish, it'll trade through it, right? So it's not a matter of having to guess or predict what the market's going to do. Just let it tell you simply what it's going to do, right? These are things we do every single day on 1 minute, 5 minute charts. And you guys can see reading price action is universal. You know how to read the lower time frame. Well, you know how to read the weekly, the daily, and it all comes together for you. And we have this 15-minute gap here. We'll go ahead and extend this one through. And then we have a 15-minute gap here. We'll extend this one through, right? So if we're going to get up here to this best case target here, right, it's very simple. What's the market going to do? Get above this gap, use it as support, get to this gap, use it as support, and reach higher, right? Very simple stuff, things we do every single day. So that's what the market's going to do if it's going to get up there. But if it's not going to get up there, what's it going to do? Hit one of these premium levels, confirm weakness, and then these things will be able to decipher in the lower time frames, right? So it's just a matter of taking what the market's giving you, understanding how to read the charts. So again, reaching that 15-minute gap, unable to get above it though, so still watching. All right, so let's say we were considering bullishness. Well, what would I need to see? Get above that new day opening gap, right? Support, reach this one, get above it, right? Show strength. What's it showing now? Weakness, right? It's unable to get above that new day opening gap. It's unable to get above that 15-minute fair value gap. So that's why the levels I share with you guys, they work. And it's not because I'm just using one fair value gap. Many times I have other levels that converge. So if I have like this new day opening gap here inside this fair value gap, then that tells me this is going to be a key influential level. But everything here is indicating what? Weakness, right? Because it can't get above this 15-minute gap. It can't get above the new day opening gap. So then what would we look for? Sell side down here, right? Sell side here, and then mid gap down here. You see how we're able to predict these price runs because we know how to read price action. Run on buy side, couldn't get above the 15-minute gap. And now we have sell side here and then mid gap here. So we have this first imbalance here. We want to see how we trade there as we get up into that level. All right, so you can see we traded up to the high of that fair value gap. It's not ideal that we traded all the way up to the high, but you see the body stopping there perfectly. Now we're breaking back down through that fair value gap. So now mid gap is in play, that 0.5 level. And then again, that sell side back over here. That's all in play now. All right, so I'm going in with 5 micros here. Gonna take a low risk short in here. See if we can get a flush down into these lows. And then I will take a partial at mid gap. All right, so I'm going in very light risk here today, guys. All right, so my stop loss will be up here. I wouldn't want to see it trade through both of these fair value gaps and still sell off. So I like how the bodies are staying below midpoint of that gap. It needs to accelerate though. It's been really sloppy here in this open so far. A lot of back and forth. Again, that's why I'm in with light risk. Do like what I'm seeing here. I like how the bodies are stopping. at the midpoint of that first presented gap, and now they left equal lows here, mid gap, and then that sell side down here. So you'll see this wick here. That's a premium wick. I like how we opened, traded up into that, couldn't get above it. Now I'd want to see the market stay heavy from here. All right, I'd want to see acceleration from here. We have a new day opening gap here. I'd want to see us close down through that. That's why I'm saying we need to accelerate here. I don't like how it's spending all that time inside that gap. I want to see it smash down through that, close below new day opening gap. Because then if we do that, then that's going to tell me we're very likely to smash into those limit orders that I have. All right, there you go. That's first limit order, pay the trader. I'm going to trim risk even more though. No need for the market to come all the way back up here. This new day opening gap here, this should act as a barrier on price. It should not let the market get up through that. So that's why I'm trimming risk here. So now what I want to see is I do not want to see us close above the new day opening gap. The fact that we already traded down through it, we should just keep selling off and slipping off the face of the earth, but it's not doing that. So that's why the stop's up here, because this should not get through new day opening gap and through this up close candle if it's still going to get down into here. All right, I'm going to run down some equity here. Let me buy back one more. All right, so I just bought back one more here below the low. So we have this fair value gap here. I'm not willing to see the market trade all the way through that. So I'm reducing risk here. So now I can finally say it. Worst case scenario, we're making money. We anticipated doji. So I want to see this candle be a doji, and I don't want to see this candle's high taken out. Why can I anticipate this being a doji? Because if we're bearish, the draw's here, and we trade into a fair value gap or an order block, you can anticipate that being a doji. Ooh, you can anticipate dojis? Absolutely. If you know where it's drawing to, you have a key level. In this case, we're using the fair value gap. We want to see that be a doji, be a reversal candle. Boom. Most random. So selling short inside this breaker here, covering 2, 1, and then 2 here at the low. All right, so let's go ahead and take a look at this example. Starting at 9:30, again, that begins the AM session. And then we want to study what they do from 9:30 to 10. That's why that first 30 minutes is extremely important. And especially for newer traders, it's many times recommended to just focus after 10 a.m. on the silver bullet once the manipulation has already entered the market. But let's go ahead and study what they do at 9:30. Here we see we have London highs over here. And again, this teaching is not about finding bias, finding the draw on liquidity. This is assuming you already know where the market should draw to. I'll share a few timing elements here. On this week, we did have a major down week, because you do have to have context to understand the 9:30 Judas. Major down week this week from a Tuesday high of the week, selling off all the way into Friday. So when that's the case, many times we look for TGIF, which is a retracement back into the weekly range, right? So that sets the bias. That's all I'm going to touch on this here. I was doing this live with my group, so you can take what I'm saying at face value. It's genuinely not hindsight, right? There would be hordes of people saying that I'm a fraud if I wasn't really taking these setups and calling them out live. So let's go and take a look at it. So 9:30, they run it higher first. What that is doing is taking in retail long, right? So they run it higher first. Retail's chasing that move, and now retail's trapped long. Where's their sell stop going to be? Below these equal lows here. So they run it higher first, and then they drop it below sell side liquidity, which is going to be these relatively equal lows, right? That's where retail is going to have a stop loss. So they drag them in long. They take it lower. They stop retail out. Smart money's buying here. This is the Judas swing. Why is this a Judas swing? You said it was the first run, Dylan. Yes, but you have to know where the market's drawing to. Again, this is not going to be some secret that you're going to be able to take and just look for the same thing every single time. You have to know top-down analysis, where the market is drawing to, why it should reach for those levels. Then this will be really effective in your hands. I always refer to pattern trading, which just means blindly following patterns in the market. Pattern trading will not get you anywhere, right? So don't just say, okay, whatever the market runs for at 9:30, it has to drop and be bearish from here. No, you still have to know bias and where the market's drawing to. So again, looking back here, we have the London equal highs. So we have equal highs here that were left relatively equal with this high. So at 9:30, they run it higher. Retail's trapped long. They drop them. They're stopped out. This allows smart money to assume that position or unseat them, right? Because if you're long, how do you protect that long position with the sell stop here below these lows? Smart money is going to buy that below that 9:30 opening price. So this is the Judas swing because it's the run against the morning session. And then we see a bullish morning session here. Several components here that give you nice precision elements. Looking at the first fair value gap here, we return down into that. That's a long. Studied this long setup here with the 3 fair value gaps and a breaker. This is where you can go long as well, trading higher after the manipulation has entered the market. So at 9:30, you want to study. Many times for newer traders, you want to study the charts from 9:30 to 10, because after that, then your silver bullets are going to be extremely effective. Again, once the manipulation and the intermediate term high or low of the session has already been priced in. All right, so here we have another classic example. Looking at the 9:30 open, we want to study what they do at 9:30. We see they take the market higher into buy side liquidity or buy stops. Again, you want to be careful with chasing that first run at 9:30, right? Many times you will see 9:30 opens and just continues. Those days, I'm very comfortable passing up on those trades. I'm not trying to trade every single price run. I want to trade price runs that make sense, that give me what I'm looking for and come to me. I don't want to be chasing every single price run. So at 9:30, the market runs higher, and you want to study then how do we trade above this high here? We trade higher, market breaks down. So again, that first run at 9:30 helping to give you the bias for the remainder of the morning session, right? So 9:30 trades higher. Again, what's that doing? Retail sees this as resistance. They're either buying the breakout or they're stopped out of their short position. This allows smart money to sell in a deep, deep premium. And then from there, you can look to trust your sell models into the sell side liquidity here below market price. And as far down as the London relatively equal lows here, right? Time-based liquidity using the 9:30 manipulation to frame the bias. And of course, if you know where the market's drawing to on a daily, hourly, or 15-minute time frame, again, this is just going to be even more impactful and helpful. But you can start studying this time of day and see how you get beautiful trades once that manipulation is passed. And the most important thing is you don't want to be a victim of that 9:30 manipulation. Chase the market when it's running in that first few minutes, which is why something I always recommend is being patient, especially at the 9:30 open. Let the market show its hand and tell you what it's going to do. And this is exactly how you want to do that. Hope this video was insightful. I'll have my team include a recording of a live execution of me actually going short after a Judas swing. Again, so you guys can see how this makes money on the right side of the chart. Hope it was insightful. See you guys in the next one.